Hey, welcome to Investing Confidential. A lot of talk today about a Fed pivot. If you're buying stocks today, you're gonna have a problem. There's no Fed pivot. Okay, all this talk about a Fed pivot is a bunch of malarkey. You got to look at the numbers. Okay, the numbers aren't telling you anything. There's a speculation that the Fed's going to do 75 and then talk about doing less. Doesn't matter what the Fed does. They are so behind the curve. They're going to have to keep raising rates into next year, okay, into 2023 through the first quarter because inflation is sticky. Look, I have said before, inflation has come down. It is coming down. The problem is that certain components, housing and other things, are still very sticky, number one. And number two, they're lagging, right? So housing is going to collapse. It has already started to collapse. But remember, as I talked about before, human nature, people there's no bids right now. Okay? There are no buyers. The buyers are way below and the sellers are way up high. So if you want to sell your house, you're certainly, after seeing crazy prices, which were artificial, as I spoke before, driven by institutions, not by people buying, but there's no bids. So you're not going to hit the low bid right now. You're going to wait. Like everyone, it's human nature. They're going to wait and they're going to wait and they're going to wait and finally they're going to capitulate and housing prices will collapse. Okay, they are going to collapse. They are already collapsing in places like Austin, Texas, which is the canary in the coal mine. They're going to collapse in Florida. They're going to collapse in New York. It's a matter of time. They're collapsing everywhere. There's plenty of rental houses. There's plenty of houses. Just right now, you've got a big spread between bid and offer. As soon as these hedge funds, institutions who really are the owners of these houses begin to capitulate, then you're going to see, the housing market. So watch Open Door, watch what Blackstone does, watch Zillow, watch all of these people who are involved in this housing nonsense, driving prices up, knocking the American dream for a loop. But this is all going to collapse. But again, the way housing is priced in the inflation components is on a 6-month lag. They don't check housing prices every day. They don't check rents every day. They check them once every 6 months. So what that means is, if we had prices collapse today, it wouldn't come out till 6 months from now. But prices aren't collapsing. There's a big spread. They're going to come down over time. They're going to probably in the first quarter, you're going to see the first whoosh. That means second quarter at best is you're going to see the housing prices take the inflation rate down to probably 4%, 5%, as I've been saying. It's not going to 2%. Okay, it's going to go around 4%, and then you're going to see the Fed begin to pivot. What does the pivot mean? Pivot means they'll probably reduce or stop the interest rate rise. Will they take rates down? Absolutely not. Anyone buying stocks today thinks the Fed's going to reverse and take rates down anytime soon. You're going to get hammered. Okay. The other problem with buying stocks right now is you're not paying attention to earnings season. Okay, earnings season is not good. You can't listen to you can't read the headlines of any website out there. All those headlines, by the way, 90% of them are being written by AI. Not by human beings. They're looking at the numbers. These companies, most public companies, do what we call financial engineering. They buy back stocks. They play games with the numbers. Sure. And then as I mentioned before, the analysts have been very negative. They went from overly positive to very negative. They were way negative, and all of a sudden now these companies are coming out with earnings beating expectations, okay? The expectations were low, but you have to look at the trend. The trend for earnings is down. It's down, and it's going to be down for quite some time. So don't buy stocks today based on a pivot or based on this absurd thing that earnings season is not good. Okay, look at Tesla, look at P&G, look at any company that's reported. Read the reports. Don't just look at the headlines. Read the press releases. It takes you about 5 minutes to read a press release. The outlook is very uncertain. And we all know that the economy is also extremely in trouble. So the bottom line is, you have an economy that is reeling, is just about to fall off a cliff. You've got earnings that are not good. You've got inflation rates that's still high, that's probably going to come down because of the economy coming down. That's no reason to buy stocks. Absolutely no reason to buy stocks. if you're going to buy stocks, analyze a company and buy a good company. Don't buy an index. Don't buy options on some ETF. Do some research on domestic companies, small cap, mid cap companies. I'm going to tell you right now, this is where you're going to get massive outperformance in the next 5 years or so, is on domestic small cap. It's a stock picking market. For the last 10 years, it's been an index market. You could just throw a dart at a board, hit an ETF, and you make money. No longer. If all you have is ETFs in your portfolio, you better think twice and start looking at become a stock picker, because that's the only way you're going to make money in the stock market going forward. Also, you got to look overseas. Okay, there's a lot of value overseas. There are a lot of countries doing much better than the United States, and they benefit from all this inflation, everything else, like Brazil, like other countries, like Chile. Wait, do some research, and get exposure to those markets. So again, stocks going up today is absurd. There will be no Fed pivot anytime soon. Okay, the numbers tell you it's not coming. And the real estate numbers are on a 6-month lag. So if you think real estate's going to help you, it's not. Real estate is collapsing, but it's going to take time to feed into the numbers. So the bottom line is, be careful. Cash is king. You can get 3%, 4% on short-term paper. There are a lot of institutions now with money market accounts, pushing 3%. They're going to be at 4% at some point. Cash is king. So as an investor, and I say to all of you, be an investor, not a trader, be careful out there.